All right, everyone. Good afternoon, and thank you for joining us today. We have Carolyn with us. She is one of Anovia's senior application consultants, and she is going to be discussing currency and exchange rate setup and review. If you have any questions during this presentation, please feel free to raise your hand or put a message in the Q&A so that way we can get Carolyn to address your questions at the end during our Q&A session. And just as a reminder, we are recording this webinar and we will post it to our on-demand webinar library for you to review again or share with anyone. And you can find our library under our resources tab on our website at anovia.com. So now I'm going to turn it over to Carolyn to kick off our presentation.
Great. Thank you so much, Angie. I appreciate it. Welcome, everyone, and Kay, for joining us today. Appreciate your chiming in here and getting us started. We're going to discuss currency and exchange rate setup and review this afternoon. Let me introduce myself again really quick. My name is Carolyn Hannon, and I am a senior application consultant here at Anovia. I've worked with NAV and Business Central now for well, more years than I'd like to admit, but we'll say it's been over 20 years. And I've been here with Anovia for about 2.5 now and really enjoying it and helping people get their systems set up and running, finding what they like about it and helping them figure out how to make it work for their business. Today for this webinar, we're going to walk through some of the accounting challenges of transacting in multiple currencies. Really, once set up for currency is complete and you understand it, currency is really pretty easy to manage. It makes conducting business in Business Central easier, a little more understandable. There's some reporting tools that help keep track of the different currencies that you're transacting in and a lot of ways to make it very transparent and easier for the user. So we're going to go through a basic introduction of some of the terms and things that you need to know about currency exchange. Excuse me. And then the setup, as well as some rules about processing in foreign currencies. So this again is kind of an overview. You'll find if you're new to implementing Business Central or if you are already implemented Business Central and you are adding a new currency because you're now doing business in a foreign country, that this is a generalized setup because there'll be specifics related to your own individual business needs that someone will assist you with as you're implementing. So before you begin, I think everybody probably knows what ISO codes are. They're a standard published by the International Organization for Standardization. It defines an alphanumeric code for representation of currency and then is used to provide information about the relationship between the currencies and their other units. So the first two characters of ISO code represent the country, and the last character generally represents the currency that's used in that country. For example, CAD is Canadian dollar, USD is United States dollar, JPY is Japanese yen, EUR for euro, all those are generally considered whatever your local currency is will be notated in the Business Central system, either in parentheses as LCY, and you're probably familiar with that. You've seen it as unit cost LCY, or maybe unit cost $, and then just unit cost, or maybe line amount $, and line amount. So it does pop up here and there, and you've probably been seeing it for a while and you just weren't really aware of what its purpose was. So there's three primary fields in the general ledger setup that make a difference for how currency is set up. In general ledger setup, what you're setting up is your local currency, the currency that your business does business in. So in my case, this happens to be USD. So my local currency code is USD. The local currency symbol, of course, is $, and then the local currency description just says US dollar. And obviously that changes. It could be euro with the euro sign and euro as your description. It could be pesos, it could be yen, whatever the case might be. Again, the general ledger setup on this general tab is for the currency that you're using in your business. Everything else will be related to the other transactions that you're going to work with. Also in general ledger setup on the reporting tab, there is a field called additional reporting. It actually says additional reporting currency. If you had only one other currency that you wanted to run reports in, for example, maybe your parent company is in a different country and they want to see it in their dollars, even though you transact in US dollars, you could add an additional reporting currency here. That's going to give you your financial reports and the dollar amounts for the additional currency. And you can specify that when you're running the account schedules. Okay, so as far as currency setup goes, you can either, I believe now that Business Central has a function that allows you to import the different ISO codes and the descriptions and the numeric codes and symbols. I think that that's part of a rapid start package, but I'll have to go back and look at that to make sure that it's part of the standard installation, but I believe it is. So then on the general tab of the currencies, you're going to have your setup. So you'll enter your code and the description, the ISO code. All ISO codes have a numeric code also, and that should be included. Your unrealized gains account and realized gains and unrealized losses and realized losses are two separate accounts that are going to show you variances in the amount of the exchange rate during the month that you're doing business in. So let's start kind of at the top. When we're setting up currencies, again, you will not set up a currency card or a currency record for the currency that you do your own transactions in. So there's no local currency on the currency page. The system is always going to get your local currency from the setup in GL. So it would be, it's considered blank as far as that goes throughout the system. Whatever your local currency is basically shows as no currency. Okay, so then touching back to unrealized gains and realized gains and losses, those fields are used at month end when payables and receivables are revalued to the month ending exchange rate. So if your invoices were entered at an exchange rate of, say, 1.2 at the end of the month, and at the end of the month, at the beginning of the month, at the end of the month, it's 1.8, then your unrealized gains or loss will have an account, a transaction in that account showing you the difference. Same thing, realized gains and losses are hit when cash is received against an invoice. So a realized gain or loss reflects the difference between how much the invoice was worth in your currency when you issued it and how much it's worth now that the currency exchange rates have changed. You will want to set up a different gains and loss account for every currency that you use, which seems a little excessive. But if I do my transactions in Canadian and in Canadian dollars and in euros, I want to have two separate unrealized gains and loss accounts and two separate realized gains and loss accounts because mistakes are kind of common when you're transacting in currency, and it's a whole lot easier to go to just one account and look for what you're trying to fix. um, the rounding amounts are they work just like any other of the tolerances in NAV. So you'll have your payment tolerance and max payment tolerance amount. You can set a percentage that says that you won't accept a payment for under a certain exchanged amount. And that is going to then notify you when you receive a payment that it doesn't meet the minimum for the currency exchange rate. And then you would know that you can work with it by either changing the max payment tolerance or by notifying your client that, they have to pay an additional amount. There was the invoice rounding precision. Sorry, I skipped a slide there entirely. So then you'll have invoice rounding works just like it does in USD. Same with the amount rounding precision. I have not ever put in a conversion dollar rounding debit or credit account because it usually just goes to the unrealized gains and losses. Um, Again, those accounts are here for reporting so that you can have reporting for variance. If you fill in these with the accounts that we had back here, these 80,000 accounts, then when you run your reports, it will show you the variances in those accounts. Then we get to the tricky part for exchange rate setup. Exchange rate setup, there's actually the easiest way to do this is to let your bank service do it, and we'll go over that in a few minutes, because most banks will offer an automated service for you. It will update your exchange rate, whether that's daily, weekly, monthly, however often you determine that that needs to happen. But in case you don't have a bank service to do that, or maybe you don't want to pay for that service, or you just want to do it once a month, or whatever the case might be, you can manually update the exchange rates and work your way through it. So on the exchange rate setup screen, you would enter all of your currencies, the ISO code and number again, of course. The exchange rate date would be the day that the exchange rate changed. So this might be the first of the year, it might be the first of the month, it might be, whatever day you choose to update the exchange rate. And then you're going to put in what the exchange rate is for that day. Excuse me. Gonna lose my voice. The unrealized gains and losses accounts will come in from the setup that you've already done on the currency card. So all of that information will be filled in for you. So the biggest part that you need to pay attention to is what's highlighted here on the screen with the exchange rate date, consider it a starting date, and then the exchange rate. So then every time that you change this setup, you will come in and change the exchange rate date and change the exchange rate again. What that does do is it eventually will write to a table that will let you see when the rates were changed and what they were. So if you needed to go back historically and say, what was the exchange rate on April 1st, you'd be able to go back and look and see what it was. So again, you have your starting date, you're going to have your currency code. Relational currency code is the currency that you want to calculate. So currency code is what you enter on the transaction. For this example, if I'm going to enter a purchase invoice and I'm going to enter it in Canadian, then I'm going to have a relational currency, which is the currency I want to calculate. If you leave that field blank, the local currency for our company is what's assumed. So my relational currency is going to be USD. The exchange rate amount identifies the rate to use for the currency that is selected on the line, and then the exchange rate amount and relational exchange rate amount are calculated by the dollar amount you enter for the local currency. So in this case, if I were to enter $1 for my local currency, which is USD, it's going to take that amount times the relational exchange, and that would be the amount that it shows. That's probably easier to show you than to try and explain on just a slide. I realize now that I'm saying that, I'm like, well, okay. So that's a little confusing, but primarily what you need to know is that relational currency is always going to be your local currency, and that the exchange rate is the part that you're really going to worry about. Very rarely, some businesses do, I suppose, but very rarely do you have a business that does, like their local currency is US dollar, and they are submitting an invoice for a Canadian company to a European company, so that they would need to transact in a completely different manner. Then the relational currency comes into play, and that's a lot more complicated and would be discussed with whoever your account application consultant or account rep is who's helping you set up your system at the time. So whoever your implementation specialist is will know more about the ins and outs based on your business needs. Exchange rate services are usually the best way to go. We talked about that earlier. Most banks offer an exchange rate service, and they will send you a URL code, which is just a website that you can log into. There's a service provider that they use. So it's kind of like saying, reach out to this website, download this file, it pulls it into NAB or to Business Central and updates the exchange rates behind the scenes for you, and you don't have to worry about it. And what we normally do is we set that up on a job queue. It runs usually in the middle of the night, so it's not blocking the system or preventing you from posting or doing anything like that. It just lets you keep moving forward with the most current currency exchange. Some banks that do transact in foreign countries require you to update the currencies more often. So that those rules are normally kind of set by the bank. If you need to make any changes to it, generally the bank will notify you that a change needs to be made. And at that point, you would probably have to disable the service by checking that enabled button. And then they would probably provide you with a new URL and you could update it and then re-enable the service and it would continue to run. Setting this up on a job queue prevents anyone else from being stuck and locked out of the system while the system updates. It would prevent posting sales invoices or purchase invoices or payments. It would prevent GL entries. So you definitely want to do that in an off hour. This is an example of the exchange rate job queue. It is set up as code unit and it knows to update the exchange rate. This one happens to be told that it's going to run every day of the week. And again, it runs in the background. Nobody really notices and it doesn't interrupt anything if the timing is correct. So once we've kind of gotten the basic of how the currencies are set up and maintained, then we need to discuss how do we transact with those currencies. So in the customers and the vendors on the invoicing fast tab, there is a currency code. You fill that out for every vendor or customer that uses currency. So if I'm going to invoice maybe just 10 customers in a foreign currency, I would go to their customer card and enter that information for them. If I receive payment from vendors and I issue purchase orders to vendors in a different currency, again, that invoicing fast tab tells them what currency we're using. On bank account, it's in the posting fast tab. And it just means that the bank reconciliation and the transactions for that bank account should be in that currency. We talked about the exchange rate service. I'm not sure how that got out of place there. We talked about, briefly talked about the additional reporting currency that was in the general ledger setup. So you can get a report like this that gives you foreign currency balance. It'll show you your local currency. This happens to be from a test company that's not local. The local currency, and then in this case, it shows USD. And the difference is posted values, current values. This difference would be your realized gains and loss account or unrealized gains and loss account. Touching very lightly on reporting because not all of the reporting in Business Central has been set up to switch between local currency and foreign currency reporting. So if you are reporting more than just financial statements or invoices in a foreign currency, then you probably will need to have a little bit of modification to some of those reports just to add a couple new columns and make it clearer which currency you're transacting in. Then there are some posting restrictions that come with multiple currencies. So when we were talking, for example, about the bank account or for reporting purposes, when you have multiple currencies, you can use, for example, the same cash receipt journal when the bank account currency is local, whatever your local currency is. So if I'm running cash receipts and my local currency is USD, then I can receive cash receipts in any currency. So, and they can close an invoice for for a different currency as well. So, for example, if I have an invoice sitting out there in US dollars, but I receive a payment in Canadian dollar, I can still receive that through my cash receipt journal and apply it to my US invoice. Same idea that I could receive a payment, say in euros, for an invoice that's in um, like pesos or whatever. Payments in one currency can be applied to multiple invoice entries that are more than one currency. So maybe there are, a parent company that's paying invoices for several subsidiaries that all do business with you, and you have sent the subsidiaries invoices in their local currencies, but you get one payment from the parent company that covers all of those invoices. If you have no currency set up on your bank account, if it's blank and it's your local currency, you can use that payment to apply to all of those invoices without having to have separate cash receipts accounts or anything like that. However, if you set up a bank account that has a currency code, so for example, my local currency is USD, I can do anything I want in the cash receipts journal. But if my local currency is USD and my bank account says that it is Canadian, then I can only post cash receipts to invoices that have the same currency code as the bank account. So that's good in some ways because you can really narrow down and keep your currencies separated. Um, or you can use it, like I said, in the local currency where there's a bigger danger of running into applying things to the wrong invoices or, little odds and ends like that. Um, it's easier to use a bank account with blank currency, but it definitely keeps things tied down if you use the currency code on the bank account. It's going to be basically the same idea when you go to look at posting and purchases. If I'm using my local currency and I am doing bank payments, then I can, if I'm doing local currency and bank payments and I'm doing a computer check or a manual check, so I'm actually issuing a check, those checks are only for local currency payments. If I leave it blank, the bank account currency code is blank and my bank payment type is blank, then I can post a payment with any currency code. Same thing goes with a bank account that has currency code. If it's a computer check or a manual check, you can only print a check with a payment line that matches the currency code on the bank account. But if the currency code is filled in on your bank account and the bank payment type field is blank, then it still is only going to allow you to post the payment lines with the same currency code as the bank account. So there is no wiggle room there like there is when it's your local currency. I don't have a lot of information related to specific setup for currencies, but if you have any questions for me, you can put them in the chat. Or I think, Angie, if they raise their hand, can I unmute this? I'm not positive how that works. Maybe just better if you put them in the chat. Again, currency is really very specific to your company's needs and the way that you want to see things for reporting and transaction purposes. Dynamics does a great job of making it as transparent as it can be, and really, pushing forward with the ease of keeping the exchange rates updated with the transaction between the bank. Does anyone have any questions?
Um, I do not see any questions in the Q&A, but if anybody does have any, please feel free to put them in now.
Okay. Oh, no questions. Great. Thank you. Thank you. I appreciate it. Again, if you have specific questions, you can always send them directly to our support team at support@inovia.com. At the beginning of this webinar, there was a little blurb with my picture and my contact information. Feel free to contact me as well. And Angie, you said that this will be available in the webinars on demand?
Yes, it will. I will get
Right.
that up by tomorrow. And I did put your um,
Great.
email in the chat. So if you'd like
Wonderful.
to reference that, you may do so.
Wonderful. Well, thank you everyone for joining. And if you come up with any questions, feel free to shoot me an email and I can get you the information that you need. And look for a republish of this webinar tomorrow. If you want to review it and send me questions, then that'd be fine as well.
All right. Thank you, Carolyn. And thank
Thank
you,
you.
everyone who joined us today. Or if you're watching this on demand, thank you for taking the time out to watch this. And I just want to let you know we do have more of our upcoming events on our events page, and that's anovia.com/events. And you can check out our training workshop page as well. We have a wide variety of training workshops to fit your role. So check out the ones that are right for you and your team. And that's at anovia.com/workshops. And if you haven't heard our latest Anovia Conversation podcast, we have a library of podcast episodes for you to listen to, and you can learn more on our podcast page at anovia.com/podcast. So browse through the selection and subscribe so you'll get notified when those new episodes air. All right. Well, thank you again, everyone, for joining us, and we look forward to seeing you soon on another Anovia webinar. Take care,
Thank you.
everyone.
Thanks.
Thanks, Carolyn.
You too. Thanks, Angie. Bye bye.